Imagine a company that tried to cheat Americans out of billions of dollars. Sounds unbelievable, right? But that's exactly what one Chinese EV company did. And now it's facing the consequences. How did this happen? And what does it mean for the future of EVs? Come, let's find out more. Chinese electric vehicle startup WM Motor has filed for bankruptcy, marking the demise of a promising standout among China's EV makers as price competition in the world's largest auto market heats up. A court in Shanghai is handling the bankruptcy case, according to a filing dated Monday on the National Enterprise Bankruptcy Information Disclosure Platform. WM Motors' planned reorganization will introduce strategic investors from across the globe to achieve its rebirth, the company said in a statement posted on its official Weibo account on Tuesday. The car maker said it had been mired in an operational dilemma in recent years due to the pandemic's impact, capital market sluggishness, large price swings in raw materials, and setbacks in gaining capital needed for operations and development. U.S.-listed second-hand car dealer Kaixin Auto Holdings announced in September a non-binding acquisition term sheet with the troubled EV maker. The deal came after WM Motors' backdoor listing through a reverse takeover with Hong Kong-listed Apollo Future Mobility fell through. The failed deal was seen as a survival move after two previous fruitless attempts by Motor to seek a listing in Shanghai's Star Market and Hong Kong. Founded in 2015 by renowned auto veteran Freeman Shen, WM Motor was seen to be among rising Chinese EV startups Neo Li Auto and Xpeng. Its backers included Chinese tech giant Baidu and Shanghai's state-owned asset regulator. However, the Shanghai-based startup struggled to eke out profits in the capital-intensive auto sector. WM Motors' annual losses doubled to 8.2 billion yuan, $1.13 billion over the 3 years to 2021, according to its stock prospectus released in June 2022 for a planned Hong Kong IPO. China's passenger vehicle sales returned to growth in August year-on-year, ending a streak of losses since May, as deeper discounts and tax breaks for green vehicles boosted consumer sentiment. WM Motors started in 2015 and raised a lot of money from investors who believed in its vision. It also had support from some big Chinese tech companies like Baidu and Tencent. The company made 3 models of EVs, the X5, the X6, and the X7. They were supposed to be smart, stylish, and affordable for Chinese customers. When talking about WM's bankruptcy, it is important to know what caused the company to move into this situation. Some of the reasons for the bankruptcy of the Chinese car manufacturers are the COVID-19 pandemic. The pandemic affected the whole world in 2020 and 2021. It made people stay at home and avoid traveling. It also disrupted the supply chains of many industries, including the auto industry. This meant that WM Motors had trouble getting the parts and materials it needed to make its cars. It also had less demand from customers who were worried about their health and income. The capital market. The capital market is where companies raise money from investors by selling their shares or bonds. WM Motors needed a lot of money to keep making and selling its cars, but it was not profitable. It lost more than $1 billion in 3 years. It tried to go public, which means to sell its shares to the public, but it failed twice. It also tried to merge with another company, but that did not work either. It ran out of money and could not pay its debts or employees. The competition. The EV market in China is very competitive. Many other EV startups want to be the next Tesla. There are also traditional car companies that are making their EVs. These competitors have more experience, resources, and customers than WM Motors. They also offer better features, quality, and prices than WM Motors. Some of them even get subsidies from the government to help them grow. The raw materials. The raw materials are the basic ingredients that are used to make something. For EVs, one of the most important raw materials is lithium, which is used to make batteries. Lithium is very rare and expensive, and its price changes a lot depending on supply and demand. WM Motors had trouble buying enough lithium at a reasonable price to make its batteries. It also had to deal with environmental regulations that limit how much lithium can be mined and used. Kaixin Auto Holdings is one of the primary dealership networks in the premium used car segment in China. Supported by the rapid growth of China's used car market and leveraging its hybrid business model that offers both strong online and offline presence, Caixin has transformed itself from a tech-enabled financing platform into a nationwide dealer network that combines both self-owned and affiliated dealers, as well as value-added services. Weltmeister is a Chinese electric car brand owned by WM Motor Technology Corporation Limited, a company in Shanghai that makes electric cars. They launched their first car, the X5, in May 2018 at a car show in Beijing, and people started getting their cars in September 2018. Companies like Baidu and Tencent, which are well known in China, have invested in WM Motor. They build Weltmeister cars in a factory in Wenzhou, Zhejiang Province, which can make up to 100,000 cars every year. Weltmeister Motor also has places where they do research and development in China, Germany, and the United States. WM Motor started in January 2015, and it was created by Freeman Shen, who used to work for a company called Geely, and later became the boss of Volvo's China part. Before Weltmeister, he also helped start a company called Patio Group, which was big in making cars connect to the internet. In November 2016, WM Motor began building its first factory in Wenzhou, a place in China. This factory has been making a car called the X5 since September 28, 2018. In August 2017, Weltmeister Motor bought another company called Polarsun Automobile, which could make cars in China. This helped them to get the licenses they needed to make different kinds of electric cars. In January 2018, WM Motor started building a second factory in Huanggang, another place in China. WM Motors sells its cars mainly in China, which is the biggest market for EVs in the world. It has 3 models of EVs, the X5, the X6, and the X7. They are all SUVs that can go more than 250 miles on one charge. They sold about 23,000 cars in 2020 and 16,000 cars in the first half of 2021. It ranked 9th among Chinese EV makers in terms of sales volume in 2020. WM Motors does not sell its cars in other countries. It would have to follow different rules and standards for cars in different markets. It would also have to compete with many other car companies that have more experience, resources, and customers than them. So what will happen to them as the company has gone bankrupt? The court will decide what will happen to WM Motors. The court will look at their assets and liabilities. Assets are the things that the company owns, such as its factory, its cars, and its technology. Liabilities are the things that they owe, such as its loans, its bills, and its wages. The court will try to find a way to pay off the company's liabilities with its assets. The court may sell some or all of WM Motors' assets to other people or companies. These people or companies may use that assets of the automaker to make their cars or other products. They may also change or improve Weltmeister Motors' assets to make them better or different. The court may also let some or all of WM Motors' creditors take over some or all of the company's assets. Creditors are the people or organizations that gave money to them or did business with it. They may want to get their money back or keep working with the automaker. They may also want to help Weltmeister Motors start over. The Chinese automaker said that it will try to change itself and find new investors who can help it start over. Investors are the people or organizations that give money to a company in exchange for a share of its profits or ownership. WM Motors may want to make new cars or new products with new investors. It may also want to improve its old cars or old products with new investors. However, this is very unlikely because WM Motors has lost its reputation, customers, and technology. It is also facing legal problems from its former workers, suppliers, and partners who want to get their money back. WM Motors' bankruptcy is a sad story for the car industry in China. It shows how hard it is to make and sell cars that run on batteries in a big and competitive market. It also shows how important it is to have a good plan, a strong financial position, and a loyal customer base. In a shocking turn of events, the Chinese EV giant, accused of attempting to defraud billions, is now on the edge of financial ruin. Has this EV empire truly crumbled? Comment your thoughts on the condition of WM Motors in the comment box. And don't forget to like, share, and subscribe.